In this video, we're going to talk about the good mixtures of trading edge we can add together to give ourselves a nice high probability of success. Stay tuned. Hey guys, welcome to the 7th and final part in this video series. We've talked a lot about stacking layers of edge, gave some examples in the beginning of different types of edge, showed some chart examples if we add the layers of edge together, how, in those particular examples it worked out well. But the theory being, if we add all the layers of edge together and we do that consistently, it's going to give us a better chance of success and a higher probability trade than if we just add one layer, one piece of edge, or one edge at a time. I want to talk about some good mixtures now to sort of wrap this video series up. And by the way, comments below, any comments you like. Wanted something clarifying or something that you think, an extra edge that you have that you like to add to the mix, or what you think about this, thoughts, always welcome. And if you like the video, don't forget to give it a thumbs up. Okay, so the opening drive trade, talked a little bit about this before, but kind of the thing where we're pushing off the open, real day-to-day trader and me coming out. Opening drive trade, I like to see obviously the trend, so a good push to the upside or a good push to the downside, then a candlestick pattern. And so that's my first layer of edge. First edge is the trend, aligning myself with the trend. Number two, the candlestick pattern, so maybe we get a pullback and we get a little wick to the downside that pushes up, gives me a good idea that I want to go long there. And the final one is the probability of touch. Didn't really give an example of that, but let me talk about that now. If in the first 15 minutes, let's say I know for the past month the most frequent opening 15-minute range has been 50 ticks. So now I see this trend, this candlestick pattern happen. The market's gone 30 ticks, pulled back 10, and we get the candlestick pattern. I know that potentially, probably, likely, we've got a further 20 to go. So I already know that the edge is, the chances are the most likely range for the first 15 minutes is 50 ticks. We've only done 30 already. There's a good chance we've got another 20 in us. Good, that's a nice bit of edge. The trend is on my side, uptrend, a nice bit of edge. Now I can fine tune the entry with the candlestick pattern. Again, nice bit of edge. Edge, edge, edge. 3 layers of edge together. Far more powerful than just picking one. Second one I've got for you is the pullback buys sells. Again, very similar thing, but more of a swing trading thing. You're pushing up the trends in your direction. The candlestick, you kind of have maybe, it could be a candlestick pattern or it could be support and resistance. They're interchangeable in this example. Good trend, pulling back, candlestick pattern, kind of like we had with those examples from Amazon and Twitter and what have you. And now you use price action skills. So maybe you've got an edge where you can look intraday at the actual intraday price action and use that as a leg to get in. So you've got your edge of your trend, you've got your edge of the candlestick pattern within the trend. Very nice. And now perhaps you've got some superior tape reading price action skills that you can use intraday to time your entry on that specific day where that candlestick pattern has occurred, or the next day. You're adding those layers of edge together. The final one I've got for you guys is earnings trade. We saw that a little bit with kind of the Foot Locker and the Snapchat thing. You've got a reprice. You've got a candlestick pattern, the sentiment is skewed. This would be to the upside. I'm guessing off the top of my head something like Weight Watchers would be a great one. Massive short float on it. You get the reprice, you get maybe a little bit of congestion, and then you get a bullish engulfing or something like that. Again, a bullish candlestick pattern trend, yes, check. A candlestick pattern that aligns itself with the direction of the trend, check. And then you've got the sentiment skewed in one direction, check. Adding those layers of edge together. Very, very powerful. All right, ladies and gentlemen, let's talk about the summary now. I run through kind of, over these little series of videos, my kind of looking at trading edge. When I develop a trading edge, I very rarely will use it in isolation. And I guess the point I'm trying to get across is start to think of multiple reasons to take the trade. So, while, you get a lot of people saying, oh, the buy on support trade or the candlestick pattern or whatever it is, and they're looking at it in an isolated manner. They're saying, hey, this is a nice candlestick pattern. To me, the real juice from the market comes from when you can take that and then add it into the right scenario. And it's, like I say, stacking layers of edge, but however you want to label it. So if you're in an uptrend and a pullback, and then you get what is a profitable candlestick pattern in a pullback on an uptrend, and buying a pullback and uptrend is a valuable strategy as well, add them together, then you've got an even more higher chance of success. And I'm talking from experience, guys, as well, as I know that other people do this kind of thing. Decide on your edge playbook. So what I mean by that, so have you got candlestick patterns that you like to use? Have you got kind of pullback strategies? You like double tops? go through the whole thing that you know you use to make your trading decisions, and then mix and match them together and say, well, actually, if I see this kind of downtrend, aggressive downtrend, and I see a double top in the lower third of an aggressive downtrend intraday or on a swing trade perspective, I know that's a really nice pattern, because I love double tops and I love trading downtrends. Put them together, I've got my golden setup, whatever it may be. And start stacking those layers of edge. You start stacking your edge in layers for each trade you do. So the more layers you can have, that you know have edge. And this is a bit different from Confluence, where we look on a chart. Confluence is very much talking about a chart where we kind of come down to support, and it happens to be a whole number from before in this. Different kind of thing. This is more of a broad trader's analysis of it, saying, hey, I know that if I use this strategy, and this strategy, put them together. And the final thing, I think you get the idea of this stacking layers of edge, guys. And just the final thing is just to say, decide on your non-negotiables. You have something where you definitely do not want to see it in the trade. So this is a big red flag that says, hey, you know what, whatever happens, I'm not taking it. And that could be something like, we might have an uptrend, we might have a pullback to support, and we might have a candlestick. It looks very, very good, very, very nice, but the trend has already done the average true range of the day. In other words, the probability of touch, the probability of it moving further is low, because it'll be unusual, and you like to align yourself with the usual. And that's a non-negotiable for you. You've already done it, the ATR, you may have the others there, but there's something that says, hey, big red flag, I'm not taking it. So decide on what kind of thing. Another example might be, hey, we're in an uptrend, we're pulling back, and we've pulled back more than kind of half of the move, if you like, or whatever the level is for you. And you may see your candlestick, you may see your support, but it's pulled back too far. It's a no-go. You've got to have those non-negotiables in there, because even though it's perhaps a different video in itself, having those gives you the structure to say, hey, you know what, I need to see this, but as long as I don't see that, I'm good to go. So anyway, guys, I hope you like the video series. If this is the first video you checked out, go and check them. It's a 7-part series talking about stacking layers of edge. I'm going to bring the kind of main slide up. There it is there, stacking layers of edge. Path to higher probability trades. It worked very, very well for me. It works very, very well for me now. I love doing this. This is my kind of thing where I grab things that I know work. And also it allows you to, when you spot a new edge, to bring it in to your strategy, rather than just sitting and standalone and saying, hey, it's a chart pattern I like to take. You say, okay, I like to take it. Where does it fit in with my existing things that I know work? Am I buying with a trend? Am I buying pullbacks? Am I buying a support? Or even if you're doing it with mean reversion type things, whatever, where does it fit in? How does it fit in with that layer of edge? So if you enjoyed this video series, guys, give it a thumbs up. Don't forget to leave a comment below. And if you haven't subscribed yet to the channel, please do so to see more videos from me and other traders on this channel. Good trading, guys. Take care. See you in the next one. Bye-bye.